welcome to the first day of June. This is Business Morning Live on Channels Television. I'm Laddie Williams.
Good morning and welcome. I'm Ini John Mekwa. Before we get into the program today, let's give you some business news. Oil prices rose today with Brent topping $70 as optimism grew over the fuel demand outlook during the summer driving season of the United States, the world's top oil consumer. Prices were also boosted after data from China showed that factory activity expanded at its fastest this year in May. Brent crude futures for August gained 1.2% to $70.17 a barrel. U.S. West Texas Intermediate crude for July was at $67.61 a barrel, up $1.29 from Friday's close. The Organization of Petroleum Exporting Countries and its allies, OPEC Plus, are likely to agree to continue to slowly ease supply curbs at a meeting today. OPEC sources said as producers balance an expected recovery in demand against a possible increase in Iranian output. OPEC Plus decided in April to return 2.1 million barrels per day of supply to the market from May to July, as it anticipated global demand would rise despite surging coronavirus cases in India, the world's third largest oil consumer.
And back here, the Nigerian National Petroleum Corporation is giving labor unions the assurance that there are no plans to retrench its workers in view of the impact of COVID-19 on the global oil and gas industry. Speaking during the inaugural lecture of late Comrade Francis Johnson, the Group Managing Director of the NNPC, Mr. Malik Hyari, admits that the corporation is not immune from the COVID-19 disruptions. He adds that the corporation is taking deliberate steps to realize its potentials through its employees, who are its critical asset.
The global oil and gas industry is going through complex transitions that require our collective resilience to survive. Global business landscape is fast changing to accommodate the new normal advanced by the COVID-19 pandemic and the associated global economic impact. There are many things that will never come back to normal that we know again. And this, of course, has impact on everything, including leadership. Corporations have responded and are still responding to these shifts with a variety of unpopular measures, ranging from staff layoffs to salary cuts, in order to keep costs as low as possible and survive in these difficult times. The NNPC, now I'm speaking as a GMD, is definitely not immune from those global impacts, and we have taken careful steps to align our business portfolios and operations to ensure continued value realization while deliberately preserving our employee as our most critical asset. And I'm sure we all know in this industry, probably the only national oil company that did not consider layoff as a result of COVID-19.
Well, we'll say, good one that the NNPC did not lay people off. I wonder where people have gone to, employees would have gone to if they had.
Yeah, and more assurances.
Yeah, more assurances. All right, moving away from oil and gas now, Meccano International, exclusive partner of Geely Autos in Nigeria, has added the Coolray SUV to its list of high-tech automobiles in the Nigerian market. The company launched the new SUV and also displayed a powerful piece of engineering assembled here in Nigeria at Geely's flagship showroom in Victoria Island, Lagos. This is how it went.
With comfort, safety and class, Geely Nigeria is opening a window of opportunity, making premium experience a standard option with the Coolray. At this well-attended launch in Lagos, the guests wait to see the SUV that is not only distinct in interior designs, but athletic in bodyline make its first impression. The company's executives whet the guest appetites with some information about the Coolray.
Geely Nigeria provides the best in-country warranty on all its models, being 150,000 kilometers or 5 years, with a VIP courtesy car available as a replacement to all our clients nationwide. Meccano International Limited has succeeded in the African market not only by providing quality goods to its customers, but rather by combining these quality products with the provision of first-class after-sales.
This car is the best car to have. It's the best car to stop the second-hand flow into the market.
Let me hear you make some noise!
It's time to unveil. The Coolray makes the grand entry to the admiration of the guests.
It's an exceptional crossover SUV with exceptional technology and exceptional power. The power comes from a 1.5 GDI engine, turbo engine. That means that if you enjoy driving, this is a car for you. It's a thrilling ride. It provides a thrilling ride for you. It has the most tactile features on the inside, luxurious, premium quality. Also, the engine was co-developed with Volvo. I don't know, you might not know, but Geely Global has owned Volvo Auto since 2010. That's a massive achievement.
Geely is car, we brought it. Meccano didn't believe in Nigeria market. We believe that we need to provide a car safe, looks and stylish, affordable for the Nigerian market. And that's why we brought Geely. We are proudly assembled in Nigeria also.
Backed by Meccano International's superior positioning in after-sales service and reputation for quality products, Geely Nigeria says it is committed to providing reliable, durable and high-quality vehicles with premium features for Nigerians.
And the lack of standardized guideline procedure and requirements for exporters has led to the loss of over 17 billion naira royalties unremitted as solid minerals export. This figure is from the Ministry of Mines and Steel Development. In the period spanning January 2013 to June 2017, a total of 2,670 mineral exports were made from Nigeria. Of these, only 56 were issued mineral export permits by the Ministry of Mines and Steel and acknowledged to have paid royalties. During this period, unpaid royalties amounted to 17.12 billion, which are still outstanding to the federal government. The solution may be in the solid minerals policy, but stakeholders also have concerns about the policy. Well, Mr. Sheun Olatunji is the chairman mining group of the Lagos Chamber of Commerce and Industry, and he explains some of these concerns and possible solution to us. Good morning, Mr. Olatunji. Thank you so much for joining us this morning.
Thank you for having me.
Yeah, so the issue of the solid minerals policy has been a thing of concern. And outside the sector, people are happy that, oh, there's a policy and it's in the pipeline, as we normally say. But you in the sector have concerns about some of the adjustments being made to the policy. Share with us some of those concerns.
We are also happy about this draft guidelines. So the stakeholders are not against these guidelines. To be clear on that, it's just that we want to ensure that the new guidelines doesn't add bottlenecks to an already encumbered export procedure in Nigeria. So what we have realized from this guideline, which we pointed out at the stakeholders' engagement, was that it increases the duration to conclude an export transaction. Currently, it stands at about 10 working days to 15 working days, but with these new guidelines going into effect, it will go up to 30 working days, 29, 30 working days. And if you notice this administration's presidential ease of business, environmental council's mantra is to reduce bottlenecks for doing business, for ease of business. So we have pointed this out to the Ministry of Finance and the Ministry of Solid Minerals, and they've taken our feedback seriously. It's just that we want to ensure that they go further to plug the loopholes that cause the revenue loss while making exports seamless for us.
Yeah, so
practitioners.
how can that be balanced? Because when you talk of blocking the loopholes, sometimes it has to do with checks, you know, which might come out as bureaucracy, and of course this consumes time and, you know, a longer process. So how do you suggest that the government can balance this of blocking these loopholes but also making it less cumbersome?
Okay, it's interesting to note also that the Central Bank of Nigeria has deployed, so there's already an existing single window for exports of solid minerals, and it's powered by the Central Bank's Trade Monitoring System portal. And now on that portal, once you are ready to export solid minerals or any other non-oil exports, you just go online and within 24, 48 hours you're done with your electronic NXP. Now where the loopholes were before was where everything was done by paper NXP. Now some people feel undervalue on the paper, and some don't even fill the NXP form at all. They export illegally. So this system that the CBN has proffered is what we are advocating for. Instead of taking us back to a paper environment, put everything online so that within 48 hours, within 3 days or 5 working days, we are done with filling our NXPs and all the requirements are provided for. And that is all we're asking for.
Okay. Well, the GDP from mining in Nigeria increased to about 15.56 million naira in the first quarter of 2021 from about 11.47 million in the fourth quarter of 2020. Is this an indication that we're on the right track?
Yes. As a matter of fact, I took time to bring a compilation of revenue accruable to the country in terms of export proceeds from the non-oil sector. And it will interest you to know that in the last 5 years, 2015 to 2020, we've had upwards of $11 billion from non-oil exports. And of that $11 billion from non-oil exports, solid minerals accounts for $1.75 billion. Now, these figures are testifying to the fact that this sector needs more attention from government. So our advocacy at the Lagos Chamber of Commerce and Industry is for our operators and practitioners to create more wealth, create more jobs. And the way to do this is not to encumber the existing process, is to make it seamless, make it easier. Like, I give you an example. If you want to register as an exporter at the Nigerian Export Promotion Council, for example, all you need to do is do every application online. You don't need to go to their offices. Once you're done with that payment to remitter for TSA, for the fees, they call you after like a week or so, and you pick up your certificate. Totally eliminates paper. And this is why we think improving the ease of exporting would actually drive the GDP contribution of solid minerals, which stands at a paltry 0.2% of total GDP. That is not a good enough. The projection from the mining roadmap, which was established by the former minister, Kayode Fayemi, His Excellency, was for the GDP contribution from solid minerals to have reached 3% by 2025. Now we're in 2021. So we cannot be going backwards instead of going forward, you know.
So take, for instance, a post-oil world. Can Nigeria confidently rely on solid minerals?
Very well. So why do I say this? As a matter of fact, the prices of metals have been stable over the last 10 years. If you look at during the pandemic, where everyone was shutting down, businesses were going under, gold miners all over the world were smiling to the bank because gold peaked, and gold is still bullish right now at $1,900 per ounce. Same with other metals that are not really quoted: silver, lead, zinc, copper. So metals are the future, and Nigeria is fortunate to have some of these new drivers of the post-oil global economy. We have lithium in Nigeria. Now, lithium is a strategic mineral. It's very essential for the electric vehicle market. And this mineral is in Nigeria. I'm sure the ministry will soon begin to announce their findings from the National Integrated Mineral Exploration Program, the NIMEP project. And I'm sure it will interest investors to quickly take positions in the sector.
Lithium.
Well, one way to boost that, I mean, because at the top of my head, immediately you said that, I remember NNPC said that remittance to the Federation account might be zero this month, and already there are reports that remittances have dropped, you know, and it's all because of happenings around oil. So if we turn away from oil and face this, this could be a solution for us. But one of the challenges is miners raising funds. You know, so how do you think, and mining licenses are not accepted as collateral, you know, so how do you think, I mean, since we are talking about the policy and things that should be put in place to encourage more activity, you know, in this sector to boost our earnings, to boost our revenue. So talking about raising funds and all that, what would be the shortest possible safe way to encourage especially new miners to go into this?
Yes, raising funds is critical to any successful business, not just mining. But mining in Nigeria is peculiar because there's insufficient geological data, and it is the geological data that serves as a collateral in any mining jurisdiction. So that is why I believe the government took the bull by the horn to invest about 15 billion naira in the NIMEP project. Now, what we advocate that the government does for existing miners and solid minerals players is for them to create pilot programs. For example, the CBN doesn't have a specific policy tailored for Nigerian mining sector. It's always lumped together with either manufacturing or something. We should do something like the Anchor Borrowers Program in agro. You know, that was specifically designed for farmers. And we could see, based on that policy, we stopped drastically reduced importation of rice. We eat Nigerian rice. So we want a situation where the CBN invites us, we're willing to give them ideas on how they can work with reputable small-scale miners. You know, we have big majors in Nigeria, and that is in the limestone. We're not talking about the majors here. We want to focus on the SMEs because they form the critical mass in the sector, and they are the ones that will create the most jobs, you know. And so what we advocate is for the CBN to come as the umbrella body for finance and create a tailor-made program for miners. If you remember, some years back in 2017, I think, Bank of Industry, in collaboration with the ministry, created a 5 billion naira fund. But I would shock you to say that less than 10 people, less than 10 mining companies have accessed these funds.
Why?
So, because there are so many bottlenecks that prevent them. For example, the issue of collateral. A small-scale miner will not be able to provide legal mortgage for some of these facilities. So we're advocating, the world is moving away from legal mortgages. Let's do cash collateral, cash-based or cash collateral. Look at the business flow. Based on that, you can create, that's what the fintechs use. If you notice these days on your phone, based on your salaries, banks offer you loans. That is the kind of solution we're advocating for the mining sector, for inclusion.
Okay, well, when last was the aerial geophysical survey to provide, data for existing miners? When last was it updated?
I think that Aeromag was done during the former President Obasanjo's administration, and I don't think the latest update is the NIMEP project. The NIMEP project is supposed to be an improvement on that Aeromag that's in existence, and it is more detailed, and I believe it has brought about very, very interesting discoveries. And I think the country will smile for this.
New discoveries.
Yes.
Yeah. There was also the one local government, one mineral prospect by a former administration. Is that still on? How is it going?
Well, that's is a no-brainer because there is no local government in Nigeria that doesn't have one mineral or the other. And the key to unlocking these things is, like I said, creating programs that include miners and solid minerals players in the formal lending or borrowing market. Currently, we are excluded.
Is this captured in the policy?
You mean the new...
The one local government and one mineral approach? Comparative advantage. So, a local government has a strength in one solid mineral, so they focus on that. Is that captured? Because that's, even in Africa, yes. Yeah. Even in Africa, it's what is being sold.
Yeah.
Yes, I think what the government always advocates is for... Government doesn't want to be in the business of operating. They want to be, and they're supposed to be regulators. So they invite state governments, even local governments, if you have the capacity, go get a mineral title in your state and improve and mine and contribute to 13% derivation, because every solid mineral that is mined in Nigeria goes through 13% derivation, which accrues to all the 36 states. And I think it's a common pause.
All right. Thank you so much, Mr. Sheun Olatunji, the Chairman, Mining Group of LCCI. Thank you for sharing this morning with us.
Thank you for having me.
All right. So we'll just take a short break now. When we come back, we have another conversation waiting for you. Join us then.
Welcome back. You're still watching Business Morning live from Lagos. Now for the commodities market update. In one of the newspaper headlines, Daily Times to be precise, it writes tougher times as remittances to the federal allocation drops. Last month, Nigerian National Petroleum Corporation disclosed that its projected monthly remittance to the Federation's Accounts Allocation Committee for May will be zero. Obviously, bad news. How should Nigerians brace up for this tougher times? Bolanle Agbaje, the research analyst with Financial Derivatives Company, joins us now to make sense of this. Good morning. Good to have you.
Good morning. Thanks for having me.
Yeah. So, what shape do you see these tougher times, and how should Nigerians actually brace up for it?
Well, I think saving would be a start. Less consumption, more saving. But I'm sure the fact that the government hasn't more or less created an avenue or, higher interest rate or more attractive interest rates. So like I mentioned, the CBN does not even make it attractive for, some of these individuals to save. And obviously the impact of, COVID from last year. Inflation. But even the remittances being zero for the month of May is no surprise. We haven't really managed our situation when it comes to, bracing up for tougher times. And more or less this is the impact. Oil prices, we have the revenue from, the inching up of oil prices hasn't been that great. But the good news is that, going forward, we hope that the nature of oil prices would change. The fact that, we're seeing demand increase over time would, is more or less good news for us. And I think the government is also looking at other ways to boost, its revenue as well.
Like the solid minerals conversation we just
had. It's a very interesting conversation because, we come here more or less mine the products you get from, these mining activities falls under commodities, the likes of gold, silver. And we come here several times mentioning the fact that there's significant opportunities that Nigeria can, feed from when it comes to, increasing revenue and boosting exports, export bill from this, increases in the mining sector.
Can these tougher times be averted? Is it too late for that?
No, nothing is ever too late. I think it's just the fact that we've had a rough start and we haven't really, more or less braced ourselves for, times like this. But I think there's nothing that's never too late. We can all more or less start now and, start to benefit. Well, starting from, policies, I think the major implication of why we're seeing ourselves in this position is the fact that we don't follow through with policies. So, the CBN and the government more or less come several times to mention, okay, we're introducing several policies into the market and all of that, but they don't actually follow through. I think the Sugar Master Plan is one of them. You were expected to gain about $700 million a year from that when it comes to the backward integration, plan that the CBN had introduced about 8 years ago, and was still, not in line with. I don't think we're going to meet the 2022 deadline that they had introduced at that time. So things like that when it comes to following through with policies is a major issue in this country. Discipline is more or less
so we have great policies, we have great ideas, and we celebrate it so much, when it's being introduced and we discuss it on television.
Yes.
And then when it comes to implementing
it is a major issue. Yes. It's a big issue, and we're still battling.
All right, let's move on to the meeting of the day.
Yes.
What are the expectations?
Well, we do expect that they would, ease output cuts by about 840,000 barrels per day, which is great. Some analysts are of the opinion that by September, we should expect, demand to outstrip supply, which is great news, is what we had, what we were looking to, from the beginning of this year. And the fact that, most countries are more or less getting their balance from the COVID situation, it's great news, especially for Nigeria as well. We haven't really more or less focused on other products. Oil is still our major, the major, you know, source of revenue. So it's more any news of increases in prices and demand increasing is great for us.
But isn't the threat of third wave, South Africa, UK, isn't it a threat to this projection?
Yes, but it would always be there. But I think from what the OECD has mentioned, it seems like a lot of countries are serious about, you know, this vaccination programs. The vaccination programs have more or less proven to be effective so far. And I think before we get to about Q3, Q4, we should expect some stability when it comes to...
All right, looking at the post-meeting, what price action do you expect?
Well, so far, prices have increased to about $70 per barrel. Trying to be realistic, we don't expect, you know, any significant jump in prices so soon. But if you're looking at the optimistic side, we'll say $70 to $71, $72 per barrel in the short term.
All right.
So the OEC's projection, revising forecast, upward forecast, like you mentioned, they believe that there'll be stability in the vaccine policy and programs. And how does that affect us? You know, heavily dependent on oil and...
well, more or less a globalized... world. So anything that happened or any positive news that happens in the West more or less, you know, feeds off on us, and it's more or less the catch-up effect. We've had significant drops in growth from the COVID year, so now we'll see a rapid increase in growth, and then by the time you get into 2022, then there will be some moderation. So I guess the news that, you know, global growth is expected to increase by about 5.8% this year and an increase to about 4.4% in 2022 compared to 4% that they had projected in their last release. It's great for us. The fact that, you know, we're moving away from this wave. I think everyone is tired of, you know, the impact of this pandemic. Everyone wants to move on and, you know, more or less see growth in this fashion.
Is there anything we should be doing as a country to maximize this positive from the OECD or this forecast? Is there anything we should be doing? Bearing in mind, we still have the issue of insecurity. Yeah. That's our reality.
Tap into this good projection.
When you're talking about anything we should be doing, Nigeria now should seriously be positioning itself to benefit from the pent-up demand in the West. We have we're resource rich in several, you know, commodities, and, you know, trying to position ourselves right to be able to, you know, benefit from this pent-up demand is one thing to do. With the insecurity issue, we thought by now, you know, there'll be significant changes towards, you know, what is happening in some of the northern states, but so far we're seeing that, you know, this has significantly, and it's still ongoing and increasing. I'm sure the government is working hard to make sure this insecurity would, you know, and you know, more or less, when you're talking about this insecurity, OECD mentioned the fact that there will be growth, but the growth is more or less going to be uneven. And I think that's what we're seeing in Nigeria now.
I hope the uneven part is not our part.
It's more or less, it's there because, you know, the rich would obviously get richer, the poor will get poorer. Exactly. And when you have that, insecurity builds up. And I think that's the impact that we're seeing at the moment. It would get to a point where, you know, the government has to focus on how to create jobs, you know, for the lower end. Policies that would more or less feed into increasing the living standards of the poorer people in the country.
What about the AFCFTA? It seems we have put it at the background again.
I don't think it's in the back burner, but it's there. It's in the works. You know, like I mentioned, policies are there. I'm sure that Nigeria is benefiting from this somehow. They'll probably still come out again to mention new ways that they are benefiting from this. So I don't think it's necessarily in the back burner. No, there's no noise around it for now, but I'm sure it's something that they're working on.
All right, looking at the goodies on your slide, Nigeria's import bill is expected to reduce, and sugar seems to be the reason for this. Tell us about it.
Well, so like I mentioned, the Sugar Master Plan, you have the likes of Dangote that has mentioned that they're waiting for the CBN to follow through with this plan because they're ready to position themselves in such a way that, you know, they benefit from the backward integration and, you know, creates a situation where we're self-sufficient in the production of sugar. It doesn't make sense how they have to import, you know, raw sugar to, you know, produce the final products that we're consuming now. I'm sure they're spending billions of naira doing that where they can actually benefit from, you know, the production of sugar, of raw sugar within the country. They've also mentioned with the cement side as well, the demand for cement is, you have situations where you have a cement that is sold out within the country, and it's a new phenomenon we're seeing, even at this time when, you know, you're more or less in the rainy season. They're still seeing this pent-up demand, you know, the sold-out situation. So they're working on, you know, increasing the supply of cement and more or less stopping the export of cement so they can, you know, focus on and satisfy the domestic
demands.
Yes.
All right, so please take us through the domestic commodity price.
We're in the red this week. It's not great. Like you mentioned, the insecurity issues, you know, are still having a significant impact on domestic prices. We've seen tomatoes increase by a whopping 15% from last month to this month. And onions are up about 5% as well, beans as well. So it's not really great for commodity prices this week. That's all I can say.
Wow.
Quite a number unchanged, though. The Gary.
Yes, you have those that are unchanged, but what's important is that they remain elevated, which is not so great.
Is it possible for them to come down?
Well,
is there anything that can drive them?
The only thing is more or less the fundamentals, the demand supply.
Yeah.
When you have a situation when, you know, this insecurity is sorted out and farmers can get back into work, you know, start, you know, increasing production, then you see changes with, it's as simple as that, the demand and supply phenomenon.
And interestingly, India, the growth recovery, regardless of the...
Well, it's important to... I know, obviously, India is one of our leading trading partners, so it's great. But this growth was in Q1, January to March, and this was before the COVID...
The new
wave really felt its impact in the country. So we do expect that, you know, the Q2 growth wouldn't be so, you know, bad, and it's still great news for us anyways.
Great news. All right.
All right, Bolanle, thank you so much for giving us updates on commodities and burning issues in the country. Well, Bolanle Agbaje, always great to have you. Bolanle Agbaje is a research analyst with Financial Derivatives Company, and she gave us updates on some of those burning issues. Now, we'll just take a moment, and then we'll be back. You're welcome back. It's time to check with the markets. Will, it was a great way to end the month of May, and I hope that the month of June will follow that trend.
Yes, that's true, Ini. Trading in the capital market opened on a positive note yesterday. The performance was driven by the interest shown by the investors in stocks of Boa Cement and MTN. The all-share index advanced by 0.47% to 38,437 points, boosting the equity caps to 20.034 trillion naira. The volume declined 11.70%, valued at 2.11 billion naira, and traded in 3,827 deals. Veritas Capital Assurance was the most traded stock by volume at 29.78 million units, while Zenith Bank was the most traded stock by value at 481.18 million naira. Now, to talk more about this, let's speak to Abdurrashid Momo, stockbroker, TLW Stockbrokers. Hello, Abdurrashid.
Good morning. How are you?
Good morning, Abdurrashid. What's currently driving positive sentiments in the market? And do you think these sentiments will be sustained for the rest of the week?
Basically, as I've always said, I look at markets in terms of price action. Price action meaning how prices behave within a certain period of time. Let's say from when we've had all the good rallies in 2020, we had a very strong rally, and we are beginning to see corrections to the downside. For now, what we are seeing are actually the market is range bound, and there's no need for panic now. The market is going down. We are not seeing any new lows happening. If you check out what happened at the end of the month, the gainers were actually the penny stocks and the losers. But in terms of volume, you see that the volumes were appearing in stocks like the Zenith, the GTBs, the UBAs, the Access Banks, and the rest. What that translates is that, these banks are going to be paying interim dividends in the next couple of months. So basically, that's where investors are actually channeling their energy to too. So basically, for now, the market is going down. There's no corrections, as I said, are definitely going to happen because for any bull trend, there must always be a bear trend. And the more you see more bear trends, the more you see prices come down, the more the momentum goes up. So basically, it's like you're jumping from a high-story building and then onto a trampoline, and for you to get more momentum.
Okay,
but
Mr.
So far,
Rashid.
Financials are okay, and we are still good.
No, that's great, Mr. Rashid. What would you say the opening calls for today's market are? What are the opening numbers?
The market it's actually mixed. You see some stocks are actually trading flat, some are gaining, some are losing, but overall market, the index, it's a little bit up, but a slight change of about, I think, it's actually showing 0.84 now. 0.84, that's virtually like 0.01%. So okay. It's still looking flat. As long as we don't see any major drives to the downside, I don't think there's any panic. Bear in mind, as I said, some companies are going to be announcing their giving interim dividends soon. I think that's the juice the market is actually holding on to for now.
Okay. Thank you, Mr. Rashid, for that information. That was Mr. Abdul Rashid Momo, stockbroker, TRW Stockbrokers. Thank you for joining us on the show and sharing your thoughts with us. Okay, over to the sectoral performance. We see that sectors that we tracked, most of the sectors were mostly positive. We had gains in the banking, industrial, and oil and gas sectors, while the consumer and insurance counters made losses. The gains in the banking sector was attributed to GT Bank and UBA, while the industrial goods was attributed to Boa Cement. Oil and gas, the marginal gain recorded in oil and gas was thanks to MRS, who boosted the market by 2.78%. But that gain that we recorded, speaking of the oil and gas sector, Cornwall released their 2020 financial year report, and they announced a proposed dividend of about 1.04 billion naira. But this, however, did not do anything to push the oil and gas counter. We have, now we're going to speak to Mr. Ramat Baba, going to the fixed income sector. We're going to speak to Ramat Baba. And she's going to tell us more about the fixing, what's happening in that space. All right,
Will, I don't think that call is ready, Will, and it's time for us to take a short break. I know you have a lot of information for us, but just hold your breath, don't worry. Tomorrow is another day.
I do have a lot to share today, but I guess I have to just let go.
Yes,
I just have to let go.
Yes, all right, Will, thank you so much for the information from the market. We'll now take a break. When we come back, well, the bank holiday is over, so Juliana will be joining us after the break. Just stay with us. welcome back. You're still watching Business Morning on Channels Television, where we now head to London. Juliana, good morning. Welcome back for the holiday.
Good morning. It was just one day.
Yeah. But it's just, okay, so it's the first working day for you, and you come back with good news. The OECD reports that indicates that the UK is set for stronger post-COVID-19 recovery. How is this being digested?
Yeah, apart from the pretty good, decent weather in London, this is good news. Good news for the economy, because last year, of course, we had that pretty historic defeat, the worst contraction in about 300 years. GDP fell by about 9.8%. But the OECD have reported that the UK economy is set to grow by 7.1% this year. It's only a couple of weeks ago that they projected about a 5% increase. So this is massive for the British government. Definitely goes to show that the economic recovery, the bounce back that Chancellor Rishi Sunak and the Bank of England Governor Andrew Bailey had been speaking about is indeed in motion. The only thing is, as with all economies, it is likely to be a little bit uneven. 4 million people still relying on furlough. I believe unemployment is still at a historic low of about 4.8%. The OECD do predict that it will peak by about 6.2%. When you know, people start coming off of some of these government support schemes. But considering the vaccination program is rolling out very, very steadily indeed, you know, this is great news for the government, especially as we are set to go into the next phase of lockdown anytime soon, we hope.
Yeah, and another good news should be that Heinz says it will invest £140 million in the UK food manufacturing facility over the next 4 years. So this should buffer some of this impact of Brexit and COVID-19.
Yeah, absolutely. This is definitely seen as a vote of confidence in Boris Johnson's post-Brexit. Britain, Heinz, very, 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 very popular brand here in the UK. They've actually been bottling up the red ketchup and mayonnaise in the Netherlands. They've been doing that for the past couple of decades. And now the American brand said they are going to be shifting back to the UK. So this is great. This is going to create, I believe, they said about 50 full-time jobs. I don't know if that was a typo. It's definitely going to be a lot more than that, especially considering that they're spending $140 million. So yeah, this is good. It's not just a box-ticking exercise. I believe this is the biggest amount of investment that Kraft have put outside of America in a couple of decades, and the fact that it's going to be coming back home to Britain is indeed a boost, not just to the labour market, but yeah, as we were saying, to post-Brexit too.
So still talking about COVID-19, a dedicated terminal for passengers arriving in the UK from countries with a high risk of COVID has been opened at Heathrow Airport. Is it because of the fears of the third wave, or is this one of the way of dealing with it?
Well, it's a bit of both, really, Innie. I think the main thing is that a lot of passengers had been complaining that, you know, as soon as they get into the arrivals zone, which has been incredibly busy over the past 18 months, they've been mixing with people that are coming from red list countries. And this is one of those, you know, ugly truths about the way the government here in Britain are handling COVID. You'll be sending people to a hotel for 10 days if they've come from one of the 43 red list countries, but for about 6 or 7 hours they can be mixing in the same line with people that are coming from a country that has a very good vaccination program. So they've been dealing with it, and now they have Terminal 3 in Heathrow will now be a dedicated area where passengers from these red list nations can go through. But as you were saying, yes, there are fears about a third wave. As soon as the weather's out, everybody's out and about in the UK. They've been doing that. There have been some pretty, some would describe them as shocking images of people frolicking on the beach and in parks, very close together. The scientists are asking the government to warn the public not to use the vaccination as a shield, because it's not, even though we were told it was. So there are concerns that there is a third wave potentially coming. Cases are creeping up. But yes, we'll just have to wait and see what the Health Secretary and the Prime Minister have to say later this week, Innie.
All right, we'll just wait and see, as you said, Juliana. Thank you so much, and I'll talk to you in the afternoon with Jimmy. So moving over now to the crypto market with Laddie Williams. Bitcoin is still ranging, Alta gaining.
Alta looking quite strong. And, you know, it's a new month. We'll see the Bitcoin actually closed not too bad, you know, at around the 36,000 range for the month of May. And obviously, the month of May was quite challenging for a lot of traders out there. Market cap, $1.64 trillion, up about 7.47%. That's the total crypto market cap. $120 billion traded, up about 23.74%. Bitcoin dominance is inching up a bit there at 42%. Let's look at the price of Bitcoin at 8 a.m. this morning, $36,975, up 5%. 24-hour volume, $37.84 billion traded in Bitcoin. What's the market looking like? Fear Greed Index, 20, that's extreme fear. Market is still fearful. Last month, that's the month before May, it was actually greed. And now greed is over, we're in extreme fear. So to use this to your advantage, they say buy in extreme fear, sell in greed. That's if you want to take a punt there. Let's look at the charts here. Bitcoin sitting at 36,811. We have a bullish MACD cross on the 1-day chart. It doesn't have enough volume there. It's the beginning of the month. Who knows? Bitcoin might actually do something good. All right, let's talk to Solomon Amunde now. Hello, Solomon.
Good morning, Laddie.
Good morning, Solomon. So, you know, May was a challenging year for most traders. We're in a new month. It's June. What can we expect for June?
Yeah, May was, should I say, let me say 45% in terms of expectations from the traders, but we are in June right now, and also Bitcoin is at a very critical point. It has set up a perfect triangle for a breakout. So what we are expecting is either we go down to 24K or we go up to 46K. That's what we are expecting. We are at that point currently. So everything that's happening in the market now is dependent on the move that Bitcoin will make within the next few weeks. So, but for me, I would say I'm expecting us to still go down to at least the range of $29,000 and $30,000 to pick up momentum before we can go up to $50K.
All right, so most central banks are looking at, you know, creating their own digital currencies. You know, let's say, for instance, this actually takes effect. You know, what happens to Bitcoin and cryptocurrencies? Hello, Solomon. Hello, Solomon. All right, I think we lost Solomon there. All right, top odds by market cap. BNB is up 9% this morning, $351. ADA, Cardano, up 8%. Dogecoin, 33 cents, up 10%. XRP, still inching up there, at least is above the $1 mark. It did fall below the $1 mark previously. Top 5 gainers, we have Kasuma, that's up 17.67%. Aave, $384, up 17%. And the meme coin, the king of the meme coins, aside from Doge, that's Shiba Inu, up 15.58%. The price there is so funny. Like $100 will get you so much of this coin. Tata there, up about 15% this morning. So look at the top 5 losers. We see now have Nexo there down about 1.03%. And we now have the stable coins. So this shows that most of the traders are moving away from the stable coins and moving into, you know, altcoins and Bitcoin. I'm sure they might be expecting a surge somewhere. So, Ini, that's how the market is looking this morning.
Well, it's time to make money. Let's not just play it safe every time. I guess that's why they are moving away from the stable coin.
Yeah.
I said, man, let's just plunge in and make the most of this fear environment in the market at this time. Well, this is not a financial advice. You need to consult.
Always seek a professional before going into any market. Yeah.
And that's it for the program this morning. Thank you so much for watching. I'm Ini John Mekwa.
And I'm Laddie Williams. Thank you for watching.